Hi, welcome to the Froggy 5. I'm your host, Jim Freilich, founder and managing partner of the Froggy Companies. And today I'm happy to be joined by Jonny Cattani from Sunrise Investment Capital. So Jonny, for those of you who don't know Jonny's been the host of his own podcast called Cash Flow Chronicles for quite some time now. He manages strategic partnerships for Sunrise Capital. They have been familiar with them for a long time, used to listen to Kevin Bupp's podcast forever. And they oversee a large portfolio, over 200 million of assets under management of parking and mobile home parks. And they've been doing that for over 10 years now. And Jonny has a very diverse background relative to from being a stockbroker to having his own funds. Jonny, welcome.
Yeah, thank you so much for having me, Jim. It's great to be here.
Happy to see you. We're going to jump right into it. And I'm going to ask you how you came to be where you are, how you got into real estate, anything you might have had to overcome or persevere on your real estate journey, and then, kind of the why, like what motivates you in this area, any or all the above.
Yeah, absolutely. So obviously, as you kind of alluded there, a bit eclectic, right? I'm sure some people can relate to that. 33 years old, kind of, went through college, had no idea what I wanted to do. Like studied finance, right? But still was just, unsure. Had some other jobs, did some work for a family construction company, ended up in finance. And it, of course, stole my heart, right? Was a stockbroker, as you mentioned, for about 3.5 years for a discount brokerage. I have my 763. Very much enjoyed the public sector, liked working in the stock market, but did not like the corporate world. So I'm sure people can relate to that. So I left the corporate world, joined the tech startup world. I live in Salt Lake City, which has now been dubbed the Silicon Slopes. So we got a lot of tech startups that have popped out through here, some that some people may be familiar with. And unfortunately got laid off because of COVID. Yeah. They had to basically lay off almost the entire sales team. So got laid off there, took some time off to kind of really decide what I wanted to do. While I was a stockbroker, though, and I was working with all our high net worth individuals, through them, I discovered real estate investing. And this is right as syndications were like just starting to take off. This is like probably 2018. So, they weren't mainstream as they are now, right? Not a lot of people knew about them, but of course the ultra wealthy, high net worth, did. So learned about it through there, started reading books, listening to podcasts, ended up joining a team here locally that was, buying out of state, doing multifamily out of state, helped them scale and realized I had an affinity for, capital raising. That was kind of like, based on my skill set, right? My big kind of superpower is talking to people, networking. And through that, just found a mastermind group called Raise Masters. Was a member there for 2 years and really developed the skill to, go out and teach people about syndications, passive investing, and really just about putting your money to work for you, right? So many people, especially now, right? This kind of FIRE thing is taking off, right? Financial independence, retire early, and just helping people understand that is possible. And, there's a million ways to skin the cat. And, here are some ways that I know. If that works for you, great. Not, that's great too. Did some funds, ended up raising about $1 million on my own. And the economy kind of came to a slow, obviously, as we all know, right, with interest rates and everything like that. So ultimately ended up, obviously acquired a really great skill set. Knew Brian Spear, who you mentioned Kevin Bupp. He's kind of on the acquisition side. I knew Brian personally. He's the other co-founder of Sunrise and is more on the kind of equity investor relations side. They were looking to grow their investor relations team. So started there. It was great. Talked to him for like an hour on Friday. On Monday morning, I had an offer letter in my inbox. And we immediately, it was trial by fire. 1 week later, we launched the largest acquisition still to date at Sunrise. And, we raised, about $20 million in 6 weeks to close out the year. And Eventually they decided they wanted to start bringing on some partnerships and, doing some more strategic stuff to obviously help scale and move me over into that seat. And that's the Reader's Digest version of how I got here and how I got introduced to you. So here we are.
All right, great. Thanks for that background. Yeah,
Yeah.
Funny, small world I've noticed as I've been in real estate investing and syndication. And a quick side story with Brian Spear. So I'll let you know that when we decided to create the Froggy X Factor portion of our business, which is essentially, there are several components to it, but because I have a technical longstanding background, I'm already consulting for different people, right? So I have fractional services. I saw the job that you are in right now pop up, contacted Sunrise and said, hey, Brian, I could do this job on a fractional basis before you go and hire somebody. And then I got on the phone with Brian, and after talking to me for a few minutes, he's like, you have a lot of stuff going on. We really need somebody that's focused just on this 100% of the time.
Yeah.
So
and it very much is. Yeah.
And it makes sense. Exactly. Yeah. Not the job you're in right now, but the investor relations. And I said, well, I've been doing a lot of investor relations, and why don't I, put my money where my mouth is. And so just a funny little coincidence there, but I'm glad you got the job. You deserved it way more than me. And happy to be doing business with you now as well. So
yeah, that is funny.
Raising that much money in that short period of time is amazing. What I want to ask you about within the context of all the stuff you've done, because I know you've been in oil, gas, like you said, stockbroker, and now in your current position, Sunrise really has their act together on the technology side, I think. What on the technology front are you either utilizing that you can share, or like what excites you on the front end of technology in this world today?
Yeah, I mean, we're always looking for the next best thing, right? And obviously with, AI and automations and more of those things coming out, starting to explore some of that stuff, how we can just be more efficient, right? I mean, if you can have, some piece of software that, can even reduce your workload by 5-10%, right? That can be, compounding and exponential, much like, like any other return, right? Even, a financial return. So it's the same concept. We're always looking at new things. Now, currently, obviously, we use like CRM, those kinds of things. Starting to explore some other things in terms of, whether it be outbound dialing, or, there's still things that work, right? We still use social media, paid ads, right? They still work amazing. That's how, I would say majority of our leads come in. I would say between that and Kevin's podcast are probably the majority of the ways that leads come in. So we're always exploring. The biggest thing kind of industry wide that I wouldn't say we're necessarily exploring, but, Brian's open-minded, which is one thing that I appreciate so much about him, is, eventually being on the blockchain potentially, right? And having some sort of, either bifurcated fund or, completely on the blockchain, in a sense of, taking what is inherently an illiquid investment, right, in real estate, but more specifically syndications and funds, right, where you have kind of your 3, 5, 7, 10 plus year hold periods, and making it a more liquid investment by, putting it on the blockchain and, allowing, investors essentially to trade their equity. I'm not going to say freely, but more freely, right? Essentially having a market for that. Now, that's still all very early stages, even just as a whole, right? You really don't see any syndications. You're starting to see some of it, some of the smaller things. But I would say that's probably the biggest thing that I eventually see in industry-wide as a whole. Now, is that 5 years away? Is that 10 years away? I tend to lean more closer to probably 10 years. But as the new guard begins to take over in the industry, I think you'll start to see kind of an exponential increase in those kinds of things,
Sure.
over the next few years for sure.
That makes sense. Yeah. And it's interesting. You probably have an interesting perspective from your securities license and your background, and looking at this potential of the things that are pro about real estate being illiquid is often a pro. You can't just grab the money, right? The fact that you can do it with a public REIT may be, in my opinion, the reason why public REITs are now following the stocks when they go up and down, right? Where they used to be, oh, you diversify into a public REIT. So that sort of, I know there's some liquidity pools, secondary markets, and then after you're in for a year, you can exchange. I am an investor in a few of the digitizing token blockchain companies and consult with a few, but I really only dug deep in the last year plus, because in my mind, it was all like blockchain and crypto stuff I didn't want to deal with. Right. But this area, like you just alluded to, I think it could become something big, and for better or worse, we'll see how that liquidity pools have an effect on syndication. That's what I'm a little bit interested in.
And I completely agree, right? Kind of from the compliance standpoint, how that will work, because obviously, even though we're in the private sector, still SEC oversight, right? It is a private placement, at least at Sunrise. So ultimately, you do have that oversight, a lot of compliance, right? There's a lot of rules you have to follow. I'm no longer licensed, which I'm actually grateful for, because being licensed in the private sector has even more oversight, that goes along with it. So it will be interesting to see. And I know there's a lot of people, I'm sure you and I know some of the same people working, and really digging into the tokenization and that technology and how, it can be used here. And I do believe eventually we'll get that way, but I'm not necessarily a huge believer if it ain't broke, don't fix it, right? Because we've never progressed. But when it comes to certain things, like especially when you're dealing with other people's money, which obviously we are, there's kind of that you gotta, like, okay, if the whole industry goes this direction, obviously we'll follow. But until then, we're going to stick with what we know, and
Absolutely.
we've got a great track record doing it. So we're
You don't
happy
want to
about
be a
it.
pioneer. The first thing I learned in real estate is you don't want to be a pioneer.
Yeah. Yes.
It sounds good.
Yeah. There's not very often you reinvent the wheel in this industry. You know what I mean? Like, that's why I like it so much, because there's really a playlist. And if you follow the playlist, it's like, well, here's what happens, it tends to work.
Absolutely. Absolutely. So I want to shift gears with you real quick,
Yeah.
and ask you about a deal either that you want to personally share that you've been in, or one that you've been familiar with or around that serves as a warning, or I would just say a hard lesson learned in this business for you that you want to share.
Yeah, I mean, I have it. So, and if you're in this industry long enough, do enough deals, you're going to get one, right? And I would be concerned for those out there doing their due diligence. I would be concerned if you come across a group or a person who's trying to raise money from you and they haven't had this. So that's in itself a warning. But mine was actually the very first deal I ever tried to do, a commercial deal I ever tried to do. We tried to do a ground up development self-storage deal out here in Utah. So first we had to buy the land. I put down earnest money. It was hard day one, which was my first red flag. But, I was new to the industry. Ultimately, what ended up happening, there were 3 partners, ended up having one partner drop out. And the 2 that remained, me and the other guy that remained, did not have complementary skills. We were good and bad at the same things. And so the lesson, and ultimately that led to the deal falling through. Of course, I lost my money. It was not a small amount of money. We'll put it that way. In hindsight, right, it's just a lesson in the school of hard knocks. We're all going to take those. You write it off and you move on. But the real lesson here is it is so, so important in partnerships, right? Whether it be business, personal, whatever it is, to have complementary skills, right? You can't, especially in business, be good and bad at the same things, because then the bad things will never get done, right? You need someone who can complement your skills, right? For me, although I have been in finance, I'm a good underwriter, but I'm not a great underwriter. That wasn't my thing. My thing was more the equity capital side, right?
Mm-hmm.
So for me, if I was going to go out and get into the active side, I would want someone who was a wizard underwriting. You know what I mean? Who just knew it up, down, left, and right, could do it in their sleep, much like how I am, with the capital raising side of things. Well, unfortunately, in that first deal, that was not the case. And so everything fell through, and there was a very valuable lesson that it's so, so important to find a partner that you trust and that you have complementary skills.
Absolutely. Well, thanks for sharing that lesson. Sorry you had to lose money. I've learned that one. I wasn't hard with my money on day one, though. That's a real,
yeah. That was my first red flag. But again, I was so new to the industry and so excited to
lock it up,
be in a deal, and it was right in my backyard. Everything just was like kind of clicking, and I was like, "Oh, this is going to be great."
Can't miss,
narrator,
right?
It was not great.
So now I want to flip over to something more happy to talk about, and that's something that worked out really well for you. A deal either you were with or a part of that you're proud of. Doesn't have to be the most profitable one. Ideally, it would be very profitable and make you happy.
Yeah, that's a great question. So so far, all the deals that I've done personally, all on track, right? I'm in pretty much everything but multifamily, which now in hindsight, I'm actually pretty grateful for. And not that multifamily is a bad investment. I do not believe that at all. I just believe multifamily syndication is struggling a bit right now, right? We field a lot of calls at Sunrise, just hearing horror stories of withheld distributions, people potentially losing principal. So grateful we're not involved in that. So listen, since I'm here on behalf of Sunrise, I'm just gonna talk about how incredible it has been and how incredible Sunrise's track record is. We're now 26 quarters in, have not missed a distribution, haven't lost any investor capital. And you look at it and you see 200 million. And to a lot of people, that's a lot of money. And to some who have billions in assets under management, they're like, oh yeah, you're on your way. The biggest thing that I respect so much is that Kevin, who obviously you're familiar with, is very strict in his acquisition criteria. So we always ensure cash flows day one. We have a very strict underwriting and acquisition process. And if it does not fit into that criteria, right? If you can't make 80, like Kevin says, you can't make 80% of it work with back of the napkin math, then we're not even going to bring it into the actual underwriting model. And because of that, we have been able to hang our hat on this incredible track record. Now, growth wise, there's other groups that have grown, that have been in the industry half as long and have, 3 times as many in AUM, but I know some of their deals are not doing as well. So I would much rather have kind of that more tortoise versus hare and be on the tortoise side, the slow and steady versus the hare, right? Because ultimately in the end, the tortoise wins. And really in the end, when we win, our partners win. And that's ultimately what we care about the most, right? Being stewards of capital, that I would have to say. And truthfully, until I really dug in and was talking with Brian, I hadn't dug into Sunrise's track record. And once I got here, especially, I was like, wow, because by this point, I've been in the industry for 3 years, had come across hundreds of operators, and there are very good operators out there. Do not let this sound like we're the best ones. I'm biased, of course, but when you see these groups that kind of exploded, while the iron was hot and are now having to backtrack a little bit versus a group like this that has just stuck to their guns, and now we are kind of elevated above, you see why it's so important. And why a good lesson is to stick to those guns, right? And not necessarily always follow the crowd. And, that's ultimately where we're at.
Hands down, Sunrise is like at the top of the list in this category. And with the niche that's been created there, I'm glad you guys haven't strayed from that, and a lot of people like us, we want to invest with you guys. And I think that I've been tracking this trajectory for a while, and it's pretty incredible and tight. Like all the systems, the way you guys put it, everything's put together, the way it's marketed, the way it's underwritten, from everything I could see, um, is is top notch. And at a time when a lot of people are talking about affordable housing, it's like to be 10 years ahead of everybody. Not that there weren't people years ago like Zell or people that did this in the industry.
Warren
but
Buffett is another example.
Yeah, exactly. But by and large, the multifamily craze, it just the total focus on multifamily for the last several years, a lot of those people have just sort of missed out on this area of like, okay, here's affordable housing, right here today now, and there's a lot to learn, and a lot to benefit from, and a lot of ways to help people, I'll say as well. So
yes, yeah, agreed. Yeah, at its core, it's affordable housing, right? And you're, building up these communities. A lot of them kind of mom and pop ran, didn't make any changes, any upgrades. So you get to come in and just, a lot of these tenants aren't going anywhere, right? I mean, if you're not familiar with the space, it costs you, it could, $5, $6, $7 to move a mobile home from one park to another, right? So a lot of these people, they're going to stick around. And so they want nicer amenities and, the potholes in the roads fixed and in the basic things that we would all want in a community like this. And then we get to come in and, provide those things. And it's really awesome to be a part of that. And, listen, in the end, everybody makes money too. So it's really a win-win, which is ultimately, best case scenario.
It's great. And I'll just quick side note. I'm very familiar with mobile home parks, having grown up in one. So, and my father worked there. So I grew up as a kid, I spent multiple years helping set up mobile homes, helping move mobile homes. And so dragging out. And then I like what I've seen with Sunrise, how Sunrise goes about managing things in that.
Absolutely. Well, you and Brian have a lot in common because he also grew up in one for a long period of his life as well through his childhood. So interesting to kind of see the full circle moment for sure.
So my wrap up question is kind of in your wheelhouse, but like you said, you've gravitated to the equity side and you're better at raising money than underwriting, but around finance, because that's ultimately the thing a lot of people need help with in this industry. So what can you share with us in terms of overcoming hurdles today, or something creative in finance you want to share with people that you've learned?
Yeah, so this is a great question, right? Because for so long, at least, kind of childhood, you're taught like debt is bad, right? Loans, blah, blah, blah. When you get into finance, you realize that there is such a thing as good debt, right? So, real estate typically can be good debt. You can even, collateralize stock portfolios, right? There can be good debt that you can use as leverage to go buy more assets, build up cash flow, whatever it is. So ultimately the thing with financing is a couple things I'll say. One, never over leverage yourself. If you get over leveraged, you're going to learn. It may not happen right away, but eventually it will. You look at '08, right? Kevin is a perfect example. Had, I think, hundreds of single family homes, close to it, somewhere in that realm, pretty much lost it all. Went, I think, to almost a negative net worth, right? As did many in '08, over leveraged. You look at what's happening right now in some of these multifamily syndications with some of the bridge and variable rate debt that people used to, because that was the only way deals would pencil. Over leveraged, right? The rates go up, highest we've seen in 40 years. And, there's no real end in sight. And, the Fed just announced, we're recording this May 2nd. Fed just announced yesterday, May 1st, going to pause again, at least for the meantime. So it's very, very important, right, to kind of go back to what I was talking about with the best deal with Sunrise. Is one of our key piece of criteria is debt. We never go over 65, maybe 70% LTV if we really are necessary. And even sometimes with some of the smaller parks, we can buy straight cash and then go get debt later. So the biggest thing that I'll tell you is, listen, creative financing is great. You're seeing that a lot now, right? Seller financing. You see it in mobile home parks because a lot of these are mom and pop owners, coming up for a while. Even now, Kevin will entertain seller financing, right? Just to see if it's an option, something we can do. So don't be afraid to explore financing. Do not be afraid of debt, right? While I'm giving a warning of don't being over leveraged, don't be afraid of it because it can be a very good thing, right? It's literally leverage. But just don't get over levered, right? Don't ever over leverage yourself because I promise one day that will come back to bite you. And don't be afraid to get creative, right? Whether that's seller financing, maybe you use private money for a little bit, whatever you need to do, and then the next thing is partnerships, right? I'd rather have a quarter of a watermelon than a whole grape. So don't be afraid to go out and find partners, key principles, whatever you need to do in order to get a loan, look better on paper to lenders, whatever it may be. You may end up with a smaller chunk, but you still got the deal done. And as you start to build up, especially if you're new in the industry, as you start to build up, eventually you won't, you'll become that person. But in the beginning, it may require you to partner up and find some of these people. So don't be afraid of debt and those things, but it's obviously a vital part of the industry. And I'm a big fan as long as you use it correctly.
Good messaging. I like it. Thanks, Jonny. It was it's been great to have you on today. Hope to work with you more in the future. As you know, Sunrise, we're planning on investing with Sunrise as much as we can in the future. So we're always going to be taking a slice of whatever we raise in any fund of funds and put it aside, hoping to invest it with Sunrise. I know things fill up very fast with you guys. I look forward to having you back again and maybe being on your podcast at some point. So.
Yeah, absolutely. Thank you so much for having me. This was absolutely amazing. And we look forward to having you as a partner as well. Obviously, you and I will start working even closer together, and we'll certainly have you on the Cash Flow Chronicles.
Hey, thanks for having me on. If anybody else wants to find out more about what we're doing, please come to froggycompanies.com and check out our 3 different business areas. We also have the Froggy Fund 1 that's now open for up to $18 million. We're going to be investing that $18 million across a diverse number of assets, cash flowing and ground up. And I'm really excited about this fund and really confident that we can outperform most of the other people out there in terms of what we invest in and how we do our due diligence and the type of partners we put together. So it's great talking to you, and see you next time.